Hello there. Welcome. I am going to take my first trade US dollar, Japanese yen. It's a short position. I will go through with you why I want to short US dollar yen, and to help me do that, I've created this very official looking PDF document that explains in detail my entry reasons for the trade, why I will close the trade down, and some other important information too. Why have I created this document? Number one is I want to be as transparent as possible and explain in clear detail why I'm taking these trades. I think the more detail I can provide, the more transparent this series will be. Another reason, number two, why I've created this document is to demonstrate how detailed you should be when you are trading. If you want to be a serious trader, you need to take things seriously. Act like a professional. Pretend you're trading with someone else's funds and you need to explain to them the trades that you're taking. This document helps me demonstrate to you just how serious you should take trading. Okay, so US dollar yen, why have I gone short? The trend is clearly up. Look at the weekly here, look at the daily. Some big moves today. Let's have a look at the 4 hour and the 1 hour. US dollar yen is really climbing. Why the heck would I go short, and why would I go short now? Well, it's all based on potential intervention. Okay, so you can read this document in detail. You can pause the video and read through, but it's really based on potential Bank of Japan intervention. They are likely to intervene to strengthen the yen, and it's going to cause a big move down. They did this back in 2022, and it caused a move of about 600 pips initially, followed by a further move of about 2,000 pips following days and weeks. It's that initial move that I want to get on. I'm expecting that intervention to happen today. The reason being, we are seeing some major moves today against the yen, and we have seen some major moves throughout this week. We look at the weekly candle and the previous weekly candles, the last 3 weeks. So this month, the month of April, just look at this big bullish candle here. This is the last time they intervened, October 2022. This was the intervention move. I'm hoping for something very similar. The last time they intervened was a Friday afternoon here in the UK. So it was during the US session. It is a Friday today, and I want to get a short position open in preparation for that US session potential intervention. If they don't intervene today, I'll likely keep the position open in case it happens on Monday or early next week. That is the fundamental reasoning behind the trade. If we looked at some technical reasons, things are looking very overbought. I don't agree with trading against the trend. I'm not looking to counter trend trade, though. I'm not looking to catch a downtrend. I'm looking to catch an intervention move. So it's quite unique, this trade. I generally wouldn't be looking to sell US dollar yen. Based on the technical reasons here, things are just too bullish. Because this is intervention and things are going to happen very quickly, this is quite unique, this situation, and I'm happy to get into the trade. Entry price and why. I'm just going to enter at market. I'm not looking for any setups or patterns or anything like that, because once again, this is quite a unique trading opportunity, and it's all based on potential intervention, which could happen at any time, but likely the US session, just because they have the liquidity, the volume is there to get into some big, large yen positions. Okay, the exit details. So why will I close this out? Well, obviously I'll close this out if my stop loss is hit, and I'm looking for a stop loss of about 50 to 100 pips, something like that. I won't place my stop loss because if there is an intervention move, there could be some spread widening initially. There could also be a spike up before the move down. So I won't place my stop loss in this case, but if price is steady and it hits 50, 100 pip loss, then I will close that position down. If things go my way, I'm looking to get out at weekly support. So there's a support level here. There's this channel, bullish channel support. There's also moving averages. There's also support down here. So ultimately, this is where the position will close if I catch that retrace move. But really, I'm just looking to catch the initial move down. So I will close the majority of the position after the intervention move, which could be the end of the day or a couple of days. Usually, if we go back to October 2022, let's just do this quickly. So we look at the 1 hour for October 2022 and look at the intervention move that happened. Now, this was the intervention move. It was about 600 pips and it was over within 12, 13 hours. Okay, so that's the initial move I'm looking to get on. I'll then close the majority of the position and then follow the downtrend to one of these weekly levels. Now, why am I doing that? Because it's all based on fundamental analysis and what's happened previously. That's what worked over here. From a fundamental point of view, US dollar yen is likely to carry on climbing higher. This intervention move is not going to change the direction of US dollar yen. It's just potentially a shock down, at best a retrace move before a swing higher. So it's that retrace move I'm looking to get on and then close for profit. Hopefully I've explained this in enough detail. Read through this document, pause the video, read through it. Hopefully I'm demonstrating to you how serious you should be taking trading. If I'm going to risk £100, I really need to think in great detail the trades I'm taking, the entry reasons and the exit reasons. Another way of putting that, which makes it more exciting, is if I want to make £500 today, if I want to make £2,000 this month, I need to take this seriously. That's another way to look at it, is not the risk but the reward. If I want to double my account, I really need to be very smart and clever about the trades I'm taking. Will I add to the position? No. Once again, it's the initial move I'm looking to get on, the intervention move. If I was looking to catch a downtrend, if I thought US dollar yen could start downtrending over the next 2-3 months, then I could add to the position. But it's not that sort of trade. It is quite unique. Have I considered other crosses? Yes, I have. But the intervention will happen on US dollar yen. It's not going to happen on Australian dollar yen or Singapore dollar yen or Canadian dollar yen. There will be moves caused by the intervention, but the intervention will happen against the dollar. So this is the pair that I want to trade. Am I trading against the trend? Yes. Usually I wouldn't, but this is a unique trade. Does the trade have an obvious fundamental bias? Yes, it does. Is the trade rush? No. So generally, just explain this document to you and why I ask myself these questions is if a trade is rushed in the sense of, I have to enter the position right now. Let's quickly load up my account. Let's bring up my phone and get into the trade. Generally, if that is the mentality behind a trade, then it's based on emotion. Take things slowly. Be calm. That there's no rush to this. Even with a trade like this, which is based on intervention, that could happen at any point. Calm down. Chill out. Let's not rush things. Let's not become emotional. Okay, this is my trading platform. You can see £1,000 in the account, and I'm going to go short US dollar, Japanese yen. It's actually a Monday morning now. On Fridays, I always go into the city, go shopping with my wife, have lunch with my wife. We have a great day. We do it every Friday. If I did go short on Friday, it would have been a losing trade, and I'll be looking to go short now anyway. This is Friday's price action. Markets have reopened on Monday. Prices spiked up. So I really want to go short now. We've reached this psychological level of 160. This pair is even more overbought than it was. So let's get into a trade, and let's do £1.70 per point. So my stop loss is around this spike up here, around the top of this spike. So let's get into that trade. So that position is now open. I'm actually going to cancel my stop loss and set a take profit. I'll cancel the stop loss because price could spike up when intervention happens. So if intervention does happen today or sometime this week, there could be this spike up very quickly and then a move down. And I don't want to be stopped out on that spike. So my stop loss is there, and I will close it down if price reaches that area, but not on a spike. So let's just get rid of this. Let's move this much further away, just so it's safe. Okay. Let's wait and see what happens now with US dollar yen. If there is going to be intervention, it's going to happen at some point soon, but there's no guarantee that intervention will happen, and this could be a losing trade. My first trade could be a loser, but it was well planned, well thought out, well executed, not emotional. I'm not rushing this thing. I can just now take a step back from the market and wait and see what happens. If it is a losing trade, then I will just move on to the next one. What is the next best trading opportunity in the market? And that's what I will focus on. It looks like intervention may be happening. So this current candle is down about 300 pips, nearing 300 pips. This is how things look on the daily. We're coming off this bearish channel resistance area. The move last time there was major intervention like this was 600 pips from the high. This is the high up here, 160.20. So around 154, 154.50 is where I'll be looking to close most of this trade. It could be that price doesn't reach that level, and if it doesn't, then I'll just close at the end of the day wherever price is. It could be that price falls much further and I miss out on a much bigger move. Hence why I'm going to just close part of the position, which will be the majority of the position, because it's based on how price moved last time. There was major intervention. That was about 600 pips. So let's go on that. I think that's a good gauge. So if price can fall another, where are we, 300 pips, 250, 300 pips, then I'll look to take some profits. Looking good currently. US dollar yen is nearing 155, will likely pierce below 155, which is around that 600 pip move from the highs here. So I'm happy to take some profit now, £680. Things are quite jumpy, so I'm going to close down £1.50. So let's close £1.50, reduce that position size. So I've got some of the position still open. The trade is not over yet. If price comes back up, then I will likely enter another position. The reason being, if we look at intervention back in 2022, we had the initial 600 pip, just short of 600 pip move down, followed by a 50% retrace move roundabout, and then things continued. Price then moved sideways and then started to fall further in downtrend. So based on previous intervention, if we now get like a retrace move up, I'll be looking to go short again, close on the move down, and then just hold a small position and catch that possible downtrend. As mentioned on Friday, this pair will likely continue to uptrend long term. So I am trading against the trend. This is not a long-term trade. I will want to close the position down as soon as possible, but I do want to catch a downtrend on these shorter time frames if there is going to be one. So let's wait and see what happens next. Really happy with what's been banked. I'll show you the account history and things as these videos go on, so you can actually see the money and the balance going up. But a good start. A quick update. US dollar, Japanese yen. This is the intervention move from 2022. See, price came down, obviously with the move up. Let's bring up my pen. Move up, strong move down. We then had this climb up to the 61.8 fib level and a move down, and then this thing downtrended long term. When I say long term, let's look at the daily. Downtrended for 3 months. Okay, so look at that move in 2022 and look at this move now. Very similar. Move up, strong move down, this slow climb. We've had tests of lows here, tests of lows here. It could be that price reaches this area and then starts a long-term downtrend. Hopefully it does, because I still have that short position open. If we look here, I have that part position still open and currently around £50 of profit. If price closes above this 61.8 level and we see a move up to the highs here, then I'll close the position out. It could be there's like this large double top and then price moves down, but I'm not going to risk it. That's the plan, and I'm going to stick with it. So the reversal has happened around that 61.8 fib level, just like I hoped it would. I love it when that happens. So prices come down. If I go back to today's price action, okay, so this is the move down. Where do I go from here? I'm simply just going to follow this downtrend, if there is one, by placing my stop loss above the swing high. So here's my position. We can get rid of this now, and I'll be keeping an eye on the 4-hour time frame and simply just putting my stop loss above these swing highs as they form. That's it. I don't know when the next update will be. That could be it for this video. This pair could downtrend potentially for the coming weeks and months, and that's how long the position will be open, because I'll simply just follow that downtrend with my stop loss. This is the ideal position to be in, is to catch a trend and just to follow it. And I'll be doing that on the 4-hour time frame. It could be though that price just comes up, and if it does, I'll be stopped out above this swing high, and I'll be stopped out for profit. Now my entry was up here, look, so I'll be stopped out around here for a small profit.